problem solved? Are we fine now?
No, I don't think problem solved. Problem is contained, let us say. The authorities have thrown the kitchen sink at the problem, and they've achieved a stabilization. But there's still a lot of nervousness around the market.
Jonathan, one of the things we've been reading this morning is a lot of back and forth among banks, Deutsche Bank, Macquarie, on whether or not what we've learned about the Chinese government and its attitude towards equities leads us to believe that China will be included in the MSCI next year. Is it a modern, enlightened equities market?
No, what you've got is a government in China and a communist party in China that wants to use the stock markets more. It wants corporates to raise money through the market rather than credit and bank loans. And it wants to develop the market, most certainly. It wants to make it stronger. It wants to make it more transparent. But at the same time, it wants to keep control over that process. And we've seen in the last couple of weeks what happens when you let the market rip. And that is not something which the Chinese authority like. So we're going to have, as it were, a growing market, but within framework, within parameters set by the officials, and that will distort the market.
John, you've written very much about China in the 21st century. Let me take the week back a couple hundred years. The China that Jonathan Spence wrote about is a China of Beijing and everybody else. What is the linkage right now of Beijing as a federal system to those regional big city governments? Is it changed over the last week and over the last few years?
It is changing at the moment. Xi Jinping, who is Chinese president, but more important, he's head of the Chinese Communist Party, he's trying to centralize authority on Beijing. He wants to get things done as he wants them done, which may or may not be right. And he's centralizing, he's using the anti-corruption campaign to exercise more authority over particularly the state-owned sectors, the state-owned industries, and the provincial government. So you're getting a centralization going on in
right.
China, which is like some of the powerful emperors.
From where you sit, is it all clear for their equity markets, or do we still have our radar up?
I would still watch this carefully because, for instance, as you said at the beginning, the index is up 4.5%, but there are an awful lot of companies which have suspended their shares. So you're dealing with an index which is not a complete reflection, and the government's been pumping money into the big state-owned quoted companies. So they're distortions.